Let's get to John Hood's top picks. Your first idea, Invesco S&P Mid-Cap Quality ETF. So this is XMHQ.
Right, and what I like about this is because as we were discussing earlier, Andrew, is that I wanted to get away from, the Magnificent Seven and look at something other than that, and also to look at some mid-cap stocks. Now, the S&P 400 is the mid-cap range index, but this one has a value approach, and they only have 80 of those stocks. So they're looking at real fundamental values, and they're running a computer program, and they rebalance every 3 months. I think it's a very valid alternative in the mid-cap market just to buying straight MDY. And it certainly performed very well. We bought it in December for 118 Canadian. It's 133. So I'm certainly pleased with that one.
Okay. What was MDY, John? You referred to an ETF. What's that?
Oh, that's the mid-cap that's from Spider, I think. Okay. MDY. It trades in New York. Yeah.
No problem.
And that's got all 400 of the stocks as opposed to just 80.
Okay. Your next idea is the Alps Equal Sector Weight ETF, EQL. What's this one all about?
Oh, this is just the Alps. Oh, okay, Alps. The EQL is just the equal weight of the S&P 500.
Okay.
So all of the stocks, instead of being 10 or 15%, are now reduced to being 1/500th of the index. So that means that you're broadly diversifying among the other 593 stocks in the S&P 500. Mm-hmm. So it's just a way of getting greater diversification rather than being so totally dependent on the Magnificent Seven.
I mean, it has underperformed over the past year, of course, with this Magnificent Seven mania.
Oh, sure.
Yeah.
No.
I have the S&P 500 up 24% in a year, whereas the Alps is up only 13% total return.
Yeah, but again, and that's fine though, because I've already got the S&P 500 in our portfolios, as I mentioned, and a heavy weighting in it. This is just a way of getting some more diversification. So, and certainly I would have expected that it would have underperformed the straight S&P 500.
Okay, and then your final idea is a short-term money Horizon 0 to 3 month T-bill ETF.
Yeah, I picked up a bunch of this stuff. It's around $50 because it's yielding. I think it's still yielding about 5.03, something like that, and it's a very safe ETF to put your money in, because it's Government of Canada T-bills. So especially if you're dealing with a registered account, especially with a RIF, if you're pulling out 4% on your RIF each year, well, you get 5% in the government T-bill. Not bad.
Yeah, so Bloomberg puts it says the 12-month yield is 3.8%, but the net indicated yield is 5.2%. So
yes,
I guess that there's often complications, isn't there, in calculating yield?
Yeah, different sources will give you different yield calculations. Yeah, that's for sure.
Yeah. And different methodologies. Let me just see what way Yahoo Finance puts it. I don't even know if I have a yield here. It's interesting, isn't it? I mean, the good old money market fund was a mainstay. Has it for decades? Has it been replaced to some extent by ETFs in recent years?
Oh, I think anything has been replaced to a degree by ETFs.
It's quite true.
But I don't think that's necessarily a good thing, because I think, as I said, is that I'm happy buying an actual T-bill and knowing when it's going to mature.
Mm-hmm. Yeah.
And knowing what rate I'm going to get on it.
Let's get to those top picks. First idea, ASML Holding, a supplier, equipment vendor to the chip industry?
Yep, that's right. Currently trading just around 925, 900. But it has a very decent runway. We have a 12-month price target of $1,070. So, ASML is the king when it comes to this extreme ultraviolet lithography machine, which is basically, so they sell the machines, especially to Taiwan Semiconductor or to Intel or Samsung. And then they etch the silicon using this technology of extreme ultraviolet lithography. I'm going to be talking next about Canon, who actually does this, but in a different fashion. But they, you know, this whole AI revolution has really sort of ignited this lithography work because the etchings have to be so fine and so efficient. You know, they reported, ASML reported back on January 24th, they beat on the top and the bottom by a lot. But then they actually guided down, sounds familiar, doesn't it? But they guided down quite a bit. But you gotta love these companies. It always reminds me of Warren Buffett, who always says, if you can find a company with massive margins and has a monopoly, you got to own it. And this is what ASML is all about. You know, their gross margin is 49%, and they just make money hand over fist. So they also did a big share buyback. They, like a lot of these companies that are producing quite a bit of hay, they just did a special dividend at the beginning of, back in January. So yeah, we like these guys quite a bit.
Canon is your next idea. Of course, we think of them as camera makers, those ads on the back of National Geographic for decades. But they're in the chip business now?
Yeah, you know, it's cameras. They're also big in the printer side. It's interesting, though, this came up when we actually started following them because Canon was actually number 5 in new US patents in 2023. Surprising, eh, for a Japanese company. So they have a lot of stuff going on behind the scenes with all these patents. And then we started investigating, and then lo and behold, they came out with this, remember I was just talking about the extreme ultraviolet lithography of ASML. Well, one of the patents for Canon was this thing called nano imprint lithography. And so basically, ASML, they sort of, they use the lithography to sketch on the silicon. But for Canon, they use this nano imprint lithography, and they actually stamp the designs on the silicon wafers. So it's a little bit different, but it's cheaper. And so it's really sort of caught the industry, and they have a great funnel going on. They reported back at the end of January, so yeah. We just started adding to this, currently trading at about $28, have a 12-month price target of $36.50. So a decent, and oh, you can buy it actually as an ADR, or you can actually buy it on the Topics.
Topics, okay. Topics is?
Japan.
Japan, of course, yeah. And then finally, we are a little tight for time, Tesla.
Yep. Oh, I should have saved time for this. So everyone's probably shaking their heads, but as long as Mr. Musk can temper his comments, I think this is going to do great. You know, it's currently trading around just over 193. We have a 12-month price target at 243, so a very decent runway. Everything is humming, like on the electric vehicle side. So they have their Fremont plant over in California. They got the Texan. They have the Giga plant over in Germany. They have another one that they're setting up over in Asia. So everything is humming on the electric vehicle side. I think, and it's sort of like Google, I think one of the hidden gems in there is that they have this, the world's largest supercomputer called Dojo supercomputer. But, you know, Andy, think about it. Elon now has all these cars all over the world, and he gets data from those cars every day. And it goes into the supercomputer. And so he's building up a tremendous wealth of data and AI capability. So the Dojo supercomputer, I think, is a hidden gem. And then, you know, they also have the batteries, right? So they have the battery chargers all around. So they just have, you know, it's not just about the cars that they have out there. So I would weigh in here. It does express some value. They just reported. And granted, you know, when Elon was on the conference call, he was very, very conservative, and you know they're going through a new retooling because they're bringing out a new model. They've also got the Cybertruck that's coming out later this year,
and it's been tricky.
Yeah, so he really downplayed the growth of that side, but I think since he's brought down the expectations and the stock has actually moved with it, I think they'll surprise on the upside, on the electric vehicles, on the batteries, but then they have these other businesses going on.
First idea here is the Invesco DB Agriculture ETF. Now, DBA, we have seen a big drop in food prices since Putin attacked Ukraine. They initially surged.
Right, yeah, they did. This one is this one's a great way to sort of benefit in the agriculture space. You can see there's a chart, kind of pretty volatile. I mean, it's got some pretty volatile components. It's made up it's all future holdings. So we have cocoa in there, live cattle, coffee, sugar, soybeans, corn, and lean hogs. And it also has a big position in short-term U.S. Treasuries. It's just the way they run the unit. You need this large position in treasuries. Agriculture is really good on a timely basis for the trade right now, but it also has some pretty good secular trade winds. So this is a seasonal trade that we're sort of in the meat of it. So it's at sort of a timely position right now, but also long term because we've got still a growing population, is whether it's good or not for the earth. We've got a shift to more healthy diets, interest in ESG investments, and agricultural tech, sort of AI for agriculture has been made that just much more efficient and profitable.
Yeah.
And the institutional interest, big institutional interest in sort of the ag space, and institutions own more and more farmland and in the farming business. So good place to be. You may want to clip off some of this. It's long term because ag kind of goes up and down. So you maybe take a position and then you made a bit of money, you clip it and leave the rest there for sort of a long term trade.
You got a natural gas liquids play next, Paramount Resources.
Yeah, as I sprinkled throughout the show, this is a good space to be in. Paramount, these guys are veteran-led, really good management team, exploration. They focus on, as you said, liquid-rich natural gas opportunities. They focus on the deep basin of West Central Alberta. I think they're undervalued by about 50%. You can see the big move we've had right there. Pretty parabolic. Nice little move here today. These guys, like a top pick, these guys not only in natural gas underpin energy security that you get from natural gas, but also the energy transition. We talked about this last show. I touched on it a couple times. Is that we're not going to get to this spot by not burning fossil fuels along the way. And there's some companies that are better at getting us to this place, and natural gas is just one of those stocks. Very undervalued. If we get the LNG infrastructure, we're about to come on stream with being able to ship this more globally. We're sort of at the precipice of that, and I don't think the market's quite realized what the upside is for Canadian stocks in this regard.
And then finally, this is kind of a contrarian pick, a Chinese ETF, because Chinese stocks, have they ever been out of favor?
Yeah, they've sucked for like 3 or 4 years, like big time. Like you're down a lot. Now, when you're dealing with a country that's run by communists, you've got some other issues to deal with, but you can see there, this is sort of about that valuation play, that, the risk is if the risk is out that we've seen from the last 3 years and down 50%, the upside's pretty good. Xi Jinping, he made it clear back in the summer that this is a big deal, that they're going to put a lot of energy to support stock prices. They've actually got a national team that does this every day. Government involved in stock markets, we know it happens. It's happened a fair bit.
Japanese have bought stocks in the past, yeah.
Right, and they've finally been made whole. I think they're getting out here after 30 years. But China's going to do this. We know they're really big. They're probably the best at centrally planning. Whether it's worked out in the end or it does in the end is a different thing. But the risk reward in this one is really good. If it breaks below that 1374 on that chart, then you know that there's more problems coming to China, that just because they have a will doesn't mean they get what they want here. But I think on balance, Andy, the risk to reward for China, I would start with a small position. We picked up a 3% position, 3%, that's not crazy. We would probably add to that if it starts to show its mettle. I think 3% in China is a pretty small start. China deserves a bit more of people's portfolio weighting than 3%, but proof of the pudding will be in the eating, and we need to see those changes happen, in the days ahead. But the risk to reward is really, really good here. Is that it's worth a shot.
So on February 17th of 2021, this thing peaked at about $33. And so a bit before the tech stocks peaked. And now it's down to about 15. It is amazing. I guess it's a loss of face, too, when stock prices are dropping. The regime doesn't like that.
Well, especially if they've had their hand in the pot.
Yes.
and it's on their watch that it does this. But you're right, yeah. Pretty good upside still.
Let's get to the top picks. Your first idea, I know my wife likes this stuff in a gin and tonic, Fever Tree Drinks. Go ahead, please.
Right. So this company is benefiting from the premiumization trend. They really invented the premium mixer category. Their slogan is, if 75% of the drink is the mixer, why not mix with the best? And so they've really put themselves in a really interesting spot in the marketplace with their premium mixers. They started off with tonic, but they now have ginger beer, Bloody Mary mixers, margarita mixers, and so on and so forth. They are the dominant player, so they have #1 market share in every country in the world that they are in, except for Germany. They're #2, but they expect to be #1 shortly. During the pandemic, they suffered from a double whammy of glass prices going up and shipping costs going up. So we see that the stock price came off about 75%. And this was a great opportunity for us to be able to acquire shares. They look right now expensive, but we think that if they are able to have their margins normalized, that these are great attractive levels, and that's why I'm happy to have them as a top pick. We've owned them for a few years now. We bought them in 2022, and they're around a 3.5% weight for us.
Kakaku.com, a Japanese play. What are they all about?
Kakaku have three main businesses. They have Japan's largest price comparison website. They also have the largest Yelp equivalent. So they have a restaurant review and reservation website. I'm going to be in Asia next week, so I'm looking forward to testing some of their products. And they also have an emerging jobs classified business. So this is a web-based business that spawns businesses, very asset light. Founder is somewhat still involved in terms of there's a parent company with large interest in the company. The stock has come off quite a bit. They're trading at around 20 times earnings. They have a 40% target return on equity, which is unusual in terms of having that target, and the level is quite attractive. This is a moderate conviction position for us. So started off as a 5% weight, and it's since now grown to about a 6.5% weight for us. And this is a business that we hope to be partnered with for many years to come.
Okay, and then finally, Evolution AB. Where do they trade, and what are they all about?
So Evolution Gaming, their home country and the home market is in Sweden, but you could also buy them as an OTC. They're relatively active OTC on the US market, the ADR there. They are the world's largest casino. And I'm imagining most of the viewers have never heard of them, and that's by design. They dominate the live casino, the live online casino space. So companies like Ontario Gaming, BC Gaming, the big land-based casinos in Vegas and what have you, they will hire Evolution Gaming to run blackjack tables, roulette tables. They come up with all sorts of interesting games. You and I, for example, Andy, we could go online and play blackjack against each other, being at different sides of the country. This is probably one of the most profitable businesses we've come across. They don't advertise. They do have studios, so they do have studio space, so they do have some infrastructure, but for the most part, it's a very asset-light business. It is founder-run, founder-owned. They pay a dividend. They buy back shares. They don't have debt. And at around 25 times earnings, when we were buying them, they were sort of at around 20 times earnings. But even at 25 times earnings, given their growth profile, given the white space that's in front of them to continue to execute their business plan, we think that these levels are attractive for people to initiate or even add to their position. Evolution Gaming is about a 4.5% weight for us right now. And as with all of the businesses we own at Hillside, we hope to be partnered with them for many, many years to come.
That's interesting. I mean, could you and I play blackjack using real money?
Yes, real money, and they would have a live dealer at the table.
Whoa.
So you and I would be virtually at the table, but there would be a live person dealing the cards. And yeah, live online casino. It exists, and it is growing in popularity. Certainly the pandemic really catapulted this business into the stratosphere, but they continue to grow and they continue to enter new markets.
I wonder how you'd police that, because people could be card counting with a little device or something.
Yes, and that is something that they pay very, very strict attention.